The year is 2040 and cash is gone. The world has transitioned to government-issued digital credits. You walk by a street performer, tipping them with a scan of your face. All transactions are linked to your digital ID, which is monitored by the government, aided by surveillance cameras, AI, and data analytics. Any wrongdoing and your credits are automatically deducted from your account. Paper and metal money are now illegal. All financial privacy has disappeared. Then there's auto-taxing and programmed inflation. Credits are automatically and unpredictably deducted for tax, and credits become worth less in the future as governments create more out of thin air. The gap between rich and poor has never been wider, as poor citizens struggle to save credits and only the rich have enough credits to store in scarce assets. This is the future of centralized digital currency. But thankfully, we have an alternative. In 2009, a pseudonymous programmer, Satoshi Nakamoto, launched Bitcoin, a sovereign financial system. The decentralized money project grew through global collaboration, creating an unstoppable distributed network that authorities could not control, thereby empowering financial freedom to global citizens.
Damn.
Woo! That was a hard intro. made my soul go cold. Ladies and gentlemen, welcome to By the Horns, a Bitcoin podcast about South Africa. And this evening, my guest is highly esteemed. He is the man with a plan. My co-founder at Bitvice, Brandon from Technocratic. Brandon, welcome back to the show like you're here every week. Good to have you, bro.
Yeah, it's great to be here. I feel special.
Damn, that intro video really made my soul go cold, though. Because
it's a bit out there, I guess, a bit woke to the right, but
that's called being based, bro.
But yes, I mean that's what we're going to talk about today. So I'm glad we just played that for everybody to give them context before we actually talk about the steps that governments and central banks are going to take over the next few years. It's to probably they're moving to that point. They want to move to that point because it's all about control. And looking forward to the discussion.
Yeah, well, we're jumping the gun on what we're talking about, but in case it wasn't apparent yet, guys, this evening we're going to be talking about Central Bank Digital Currencies, otherwise known as CBDCs, otherwise known as the mark of the devil. We're going to get into that. But yeah, Central Bank Digital Currencies are something that governments around the world are going to be pushing really hard. Brandon, you wrote an article on this last week, quite a lengthy article, more like a mini thesis. So well done for the amount of research you put into that. It really is. I'll implore anyone to go and read the article. It's really good and terrifying at the same time. So with that, let's kick it off. I mean, central bank digital currencies. Before we get into why they are coming to be and why governments are going for them now, maybe we should preface it with a bit of a background as to what is leading us to this point and why do we think it's a terrible idea. And maybe let's start with a bit of monetary theory to get the ball rolling. Why is it that we are so anti-central banks to start with, before we get to central bank digital currencies? But what is it about central banking that you don't like, Brandon?
I just don't like the fact that the structures that they're formed on. So I think most people speak to the Federal Reserve first and all in the USA, but we've got to be quite ambiguous across the world when we talk about all these things, and it might dilute our conversation, but I don't give a shit. We're South African. We've got to talk to the South African Reserve Bank as well. We've got to talk about China's central bank. We've got to talk about all those things as well. And the fact that I don't like them is that most of them are privately owned. They have different structures. They have different types of shareholder structures. The Federal Reserve, they have private shareholders. To be honest, I actually don't really understand how it's owned. They can tell you how it's owned on Wikipedia. They can tell you how it's owned on the ports. Not Port St. Louis, I think in Mauritius, but the St. Louis Fed website. But I just don't see that as the truth. The fact that money is distributed to banks and to citizens from a privately owned entity, it's just really messed up in the first place.
Yeah, because it accrues power to whoever is controlling the printing press, right?
It does, and they can come up with some quips or some kind of thesis as to why they do that. And I understand you need to separate that from fiscal policy. You need to separate that from governments. Cool, that's fine. I understand it. You don't want to give money to politicians. That's the last flipping people you want to give money to, or monetary policy to. But still, you shouldn't you shouldn't have that structure. And I can't really explain why. I just know that every single rational person knows there's something wrong with that.
Well, I mean, it was Baron Rothschild, one of the Baron Rothschilds, that said, give me control of a country's money supply and I care not who makes its laws. And that's what it comes down to. Because if you can print money, you can create value for yourself at the expense of everyone else. And I mean, that kind of leads into the Cantillon effect, right? That is exactly what the Cantillon effect is. Those that are closest to the supply of money benefit the most to the detriment of everyone else, right?
Yeah, maybe explain that a bit more, what the Cantillon effect is.
I'm interviewing you here, bro.
So the Cantillon effect is the fact that, yes, you're right, the people closest to the money printer gets the most of the liquidity. And why is that? Because corporations have lower interest rates when they get loans than the end users such as you and me, which means they can get more money for lower cost. Yeah, it's that simple. There's obviously a bit more intricacy to it, but it all boils down to that, meaning that the more money that goes to them at a lower cost, they get more liquidity, they get to grow their capital because of that, and because they can grow their capital, they become richer than others. And that's the Cantillon effect.
Yeah, and it's well studied and well understood, and it's something that it baffles the mind when we think about it in our terms. Like, if you have to go to the bank and get a short-term credit, they hit you with 20% interest rate in your credit card, that you have to pay back. But there's many companies in the world, especially in the first world where interest rates are low, that literally get loans for free. They get subsidies with zero costs associated with them. So they use that money to buy back their own stock. Elon Musk, prime example. He gets subsidies from the government and he gets loans and grants from the government at zero cost, because it is in line with their agenda of 50% electric cars on the road by 2040 or whatever it is. But that creates winners and losers. That's the government taking sides, right? And those individuals who then sidle up to the government to suck on the teat of government largesse obviously benefit the most. And this is why you see the likes of Jeff Bezos and Elon Musk and Bill Gates, etc., always forming these cozy relationships with governments, because that is how they get that sweet, sweet free money, while the rest of us proles have to deal with high interest rates.
Yes, and it makes their policies and whatever mandates they have, and whatever things they need to do to keep them in power way more easier. And that's why they like the fiat money system. And that's why always keep in the back of your mind as we talk through CBDCs is still the same, one and the same with the fiat system. It's the same thing. It's just a different format and it's a bit more advanced, but it's still the fiat system.
Yeah, absolutely. And I mean, look, the fiat monetary system is one thing, but then there's also government bonds, which is like the kind of originator of all of this, because when a central bank prints money, it doesn't just print money, it effectively raises debt, because every dollar in circulation is actually a dollar of debt that exists out there, right? Yep. So the government will issue bonds, the central bank will buy those bonds. You might need to correct me if I'm wrong here, but they'll buy those bonds. So they're effectively buying government debt, right? And then they're issuing currency based off the back of that.
Yeah, that's basically right.
So, I mean, there's nothing there in farts, really, is what's happening, if you want to put it crudely, but that's what's going on.
Yeah, that's exactly what's going on. And, I think the important thing is to say, like, why do they want to go the CBDC route? Like, first of all, what are central bank digital currencies? They are digital currencies obviously attached to central banks. And what is the current problem they're in as to why they're moving towards that? There's probably a plethora of problems, but the main factor is that we are at 0% interest rates. And if you read...
but hang on, how did we get there? How did we get to 0% interest rates? How is that possible?
There's... I think only Ray Dalio can really answer that. And I've been reading his book, which is brilliant, but he talks about the long-term and short-term debt cycles. And remember in 2008, we got to 0% as well, but it was short-lived. It was short-lived, and there was calamity. But normally when you reach a 0% interest rate and you look back to like the 1930s, that's the end of the long-term debt cycle, which lasts about 80 years. But it's only been 10 years, and all of a sudden we're back at it again. So I think we are in unprecedented times. And I think the matter of the fact is that there's just a lack of trust in the credit system. There's just no more trust in the sovereign bond system. And we've just all got ourselves to this point. And like even in South Africa, what are we sitting at now at the repo rate?
I'm not quite sure. It's like 5%, isn't it? Thereabouts?
Yeah, sure. Probably like 4 or 5, right? We're going to zero as well. Undoubtedly.
But what is the reason for interest rates that keep ratcheting down and keep coming down? Like maybe people don't quite understand how that process works. I mean, we had Greg Foss speaking about it, but maybe you can, elucidate a bit more on that.
I just want to like put it in succinct words because I really want to focus on central bank digital currencies. But the matter of the fact is that there's a demand and supply effects on bonds, right? And one has outweighed the other since 1980. And that is, as you look at, you can go into like TradingView or whatever, and you look at the absolute regression of that chart since those times. It's just continuously outweighed the other, and you just led to this point where if the central banks were to increase those rates, right, that means that credit would be harder to get, which means consumption would go down. And the cataclysmic effect from that is that I believe that the house of cards would fall in the system we're in. And this is why they've moved towards complete money printing. It's the last step that they have.
So it's almost like a junkie, who just keeps having to hit more and more and more heroin just to keep going, to keep getting that high. Because as the reason why interest rates are coming down is because the government keeps buying its own debt back, right, through the central bank. They just keep issuing bonds and they keep buying it back for themselves. And to do that, they monetize the debt by printing more money, right? So they just keep selling themselves their own bonds, their own debt, and that drives interest rates down because there's just an oversupply of bonds in the market, right? It pushes, and the thing with bonds is like it pushes the bond price up, but as prices go up, yields come down. So that's the interest rate, like the yield on it comes down. And we get to this point where eventually we have zero return on them. And I suppose the government's next move, because the government never wants to do the hard thing for itself because it's politically not feasible, is that they want to go and push it into negative rates. So in other words, you are going to pay a government for the privilege of holding their debt. Now, in what world does that make sense, right? And how, in a normal society, that is not sustainable. They can't do it. They have to try to force it on you. And this is where cue CBDCs. Because if the central bank has a central bank digital currency that you hold and they've outlawed cash, they can do whatever the hell they want with those interest rates, and you can't do much about it.
It's so we'll talk about the control factor of CBDCs because governments want control, and we'll talk about the steps that they're taking to do that, and we'll talk about the big V word, and we won't say it too much so we won't get banned off YouTube. But that's the first step. But the fact that they're at 0% interest rates, right? They have to bring that up to calm things down. If you look at what's happening with the S&P 500, if you look at all the other markets, they are so top heavy. It's an absolute joke. And if they have to do something to take it above towards 1%, 2%. But because the system they work in through the repo rates, when they provide money to banks who then provide credit to end users, it's a very archaic system with a lot of latency. It's ineffective to get credit towards people in order to consume in a country in order to bring GDP up. And that's when you can start seeing things happening and you can start bringing interest rates up, right?
So just to clarify, what you're talking about is a distribution mechanism of money in the society, right? So like how it goes from central bank to commercial bank to end user through loans, essentially.
Yes.
Central bank loans out money.
And talking just about money. Yes, and talking just about the US right now, there's the reverse repo rate. Well, think about the opposite of that. It's like banks trying to give money back to the central bank. And that's in the last few days or a couple of weeks has reached over $1 trillion. So there's no demand for credit. Or banks are unwilling to provide credit. I don't know. We don't know what it is. Everybody has a hypothesis.
Yeah. So just so for the non-technical listener, a reverse repo rate is the interest rate that a central bank gives to a commercial bank to park money with them.
That's a repo rate.
Reverse. So like if I'm a commercial bank and I give money back to the central bank to hold, they give me interest, right? Yeah. Yes. And so it's the opposite of getting money from the central bank. I'm giving it back to them with the idea being of taking liquidity out of the market to cool the market down, presumably.
And this is what's happened from all the stimmy checks, right? All that money went directly to consumers. So there's less demand for money from banks, meaning the central bank to users is not really a lot of demand there. And that's the biggest hypothesis of it all. So, but going back to the fact that there's a lot of inefficiencies because there's so many of those intermediaries or like in the process, right? So why are central banks really want to move money to the end user quickly, efficiently, without any latency?
So central banks currently B2B, but they want to bring out a B2C business model.
Exactly. And that's central bank digital currencies, dependent on the model. And we'll share a image explaining what the models are. But the reasoning for that is that if they were to go directly to consumer, they could provide an credit to Jack, who's 60, with a great credit record at a low interest rate. But with Susie or Eva, who's 20, who doesn't have a credit record, they go at a high interest rate and they could provide it there. And now they're providing liquidity or credit to all these people directly across the country, which means that aggregated interest rates on an economic level starts going up. And that's the whole point. That's one of the points of it.
This sounds to me like Lord Keynes's wet dream.
Yeah. I was about to say something horrible, but I won't.
Look, there's nothing bad. There's nothing. You can say whatever the hell you want about Keynes. He was a pretty horrible guy. Allegedly a pedo as well.
That's what I was going to say. That's what his wet dream was.
The thing about the CBDCs that's so insidious, though, is you just made the example of Frank, the 60-year-old, and the chick who's young. Social credit comes into this now, right? Because if the government controls your money, how do they determine the interest rate? Do they do it through a credit check, the way you pay back money, etc.? No, because governments, that's not really what they care about. You look at the logical conclusion of what government will become with ultimate power is North Korea. Ultimately that's what they're after is ultimate control. And whether people will go into government thinking that's what they're going to become is totally different from what government actually does to people in the long term, which is turn them into despots, So social credit comes into this where you and me might be seen as undesirables because of, the way we think and what we do. And maybe we save too hard, maybe we're too fiscally conservative and therefore we get a really high interest rate because they're trying to get us to spend more. So that keeps their system going. So that's the real insidious part for me is the social credit score component that gets tied into CBDCs.
Yeah, I mean, that's the first part of it. Like, how do they accurately get money to the right people? Because that's what they want to do, right? They have to obviously work in the security and the processes. So the first part of it is identification of the real people and the acceptance of this new system. And people accept things very easily in calamitous situations. And that's what we're in right now.
Oh, yeah.
And this is where the V word comes in. And this is where the V passports come in. and I'm sure people know what we're talking about. Once again, I can't say the word because we'll get banned on YouTube, apparently. And
not apparently, legitimately, we'll get banned off YouTube.
And look, we're not saying we have a problem with vaccines, because it's obviously hurting a lot of people, and that's not the problem. It's the process of them. And the process of them, in my eyes, is that they identify people, they understand who they are, they can identify people through the system on a cross-border level globally. And even China has come out via the Chicago Times, whatever that newspaper is, in a Democrat state, is they want to take control of this whole system to help governments move people to the next level. Once you identify people, that's when you can start working on programmable money. And let's take a step back. Let's actually talk about what programmable money is. We talked about step one, right? You identify people, you know who they are, you need to get money to them because people understand what the problem is, why they need to get money to people to consume. Now, what is programmable money? That's the same thing as Ethereum. It's the same thing as Cardano. And it's the same thing as Bitcoin on the second and third layer. It's a little bit on the first as well. And it's about putting rules and logic into the money itself based on certain things that can happen, that are happening. And that means
like an interest rate, for example.
Yeah, like an interest rate, or dependent on your social score, but also more importantly, like an interesting concept. It's about, what if your money can die? What if your money has a shelf life of 1 year? That make you want to hold it for up to 1 year. Otherwise, you need to consume it and spend it and buy something, increasing consumption levels in a country. But there's so much other logic that can build into it. There's
who you can
pay.
Yeah.
There's a logic around, there's if it gets hacked, there's a central party that can control that and return it to you. These days of people getting your bank account details and taking your money, or you EFTing the wrong person, that can be reversed. It's programmable money. You can build anything into it. Yeah.
Almost as if Ethereum is a precursor to CBDCs, right? They got to lay the groundwork with rolling back the blockchain, undoing transactions.
Yeah. And so there's different parties, and I'm just going to show an image. There's different parties in this whole system, right? We talked about, if you're looking at your screen on the right, we just talked about central banks sending money directly to the consumer on the right. On the left, there's central banks sending money to banks which is currently really the system right now, right, via the repo rate. But if and then in the middle, there's banks sending to private institutions such as fintechs or any like a non-bank that's an institution. And what you've got to think about now is if the central bank is the balance sheet for all liquidity and all credit in all circumstances, that means they are the direct credit providers to the end user in 1, 2, and 3. What happens to banks whose not entire model, but the largest portion of their model and the largest portion of their earnings are based on credit provision and the interest earned? What the hell happens to them?
Well, I mean, I'd expect their business model goes up in flames.
So I reckon the bigger banks, and this is where monopolization is going to happen, the bigger banks might be able to do some kind of scheme in whatever country they're in to get some cut of that in order to help in distributing. Most banks will become the front end wallets or applications or websites or whatever to pass money on to people. And obviously the back end and the whole balance sheet and the whole database is owned by one central party, being the central bank. So they're the front end earning a cut on credit provision. They're getting transaction fees. They're the standard intermediary. And that poses the next question: what happens to non-registered banks? What happens to the other fintechs who want to do the same?
Yeah, I mean, look, the authoritarian regime needs its jackbooted lackeys, right? Someone's going to have to do the legwork for them, and I'm sure there'll be no shortage of banks willing to put up their hands to save the business model to do that. It's just like those companies who are the first to put up their hands to roll out mandatory Vs on their employees in South Africa, right? Like, there's no shortage of lackeys to do their bidding for them.
Yeah.
Okay, so governments want to roll this out. Certain commercial banks agree because their business model is dead if they don't. Where does this leave us? Is this a foregone conclusion?
I think right now you've seen how people have reacted to the current situation we're in, and the majority accept things as they are because they don't understand it. So I think it is a foregone conclusion, but the fiat system is still a fiat system, and it is bound to break. It's a path to zero, or whatever the saying is. But still, this could inhibit that. People are becoming quite bearish now, the rational people, and they're saying, well, I mean, obviously the system has to break, but let's look at what these things solve. What will CBDC actually solve? What's the good things with it? Because there are some good things, right? It's reporting.
Well, depending on your perspective, but yes, there are some good things depending on what side of the fence you're on.
Sure. So it's reporting, right? And I think that's good for all banks. It's all users as well. It's working on one system across intermediaries with one backend, and it means that things could be pretty accurate, and it could work quite well across all different parties involved with this one system because they're working on one backend and one database.
So because it's one system, there's efficiencies to be gained there by the centralization of like a reporting framework.
Yeah, there's definitely efficiencies in centralization. Just look at Google and Facebook and all those big things, like they became monopolies and they're very efficient in what they do now.
Yeah.
There's the repo automation part of it that we talked about. So the central bank to user, that can still happen if banks are still a part of it, and maybe they are going to become credit providers still. But through this programmable money, there can be rules and logic built into this money that can be passed very easily from central bank to the user. They could build this in there. And that is via an interoperable system that is with the central bank that everybody is plugged into. I've worked with many banks and fintechs, and I've done the integrations, and every single bank works on a different architecture and a different system and everything. That's just what they do. They're private entities. They've got their own IP and all that. Now, just imagine you had one system and everybody knew how to work with that and how to plug and play with that. Now, all of a sudden, everybody knows how to work with one another from that. Does that make sense?
Yeah, well, it's an open network. I mean, well, to some degree, an open network. I mean, I wrote about that this week, right? Like, the open network concept means that anyone can innovate on top of it, although I doubt that this will be the case, but it at least gives you interoperability. So any bank who's doing on the front end of this can just plug straight into the standard that already exists. They don't have to worry about, IP issues and someone else's kind of idiosyncrasies about how they do their internal processes. They just plug straight into the API layer. It's open API docs, and off you go. I'm sure they'll be written in Germanic font though, those API docs.
Yeah, I mean, especially at the South African Reserve Bank. Good luck with them. But like from that, there's obviously the increased credit provision to people once that happens, and that means that consumption can happen quickly. And like the biggest thing to me is that we can prevent fraud and crime. We can, because through this controllable money, where there's a central party that actually controls it. They can build rules into it. They can actually move it back in time based on something. Like if someone steals your money and you call and you prove yourself who you are and that this fact happened, that could be reversed very easily. It will save a lot of people. A lot of people have been hurt by that, So there are good things from that. And like there's a lot of bad things as well. But before we move on to that, I really also think, like maybe this is hyperbole, but I believe that there will be some kind of cartel built on this as well. The bigger banks will probably build rules into this programmable money that favors them. And they will probably pay a premium for that above other banks, meaning they could stay advantaged above the others in some form or manner. Maybe they just get like a bit more control over this money than other banks do,
or
to provide a better customer service.
A better cut of the fee,
Something like that. And that'll likely happen. It's probable, more probable than not.
Okay, but now before you get labeled as a CBDC shill, let's go through those lists of benefits and look at them from an objective / freedom-orientated individualist point of view. Because I know you're not a government shill, so I don't want people to hate on you and think that you're a central bank shill boy. But so in terms of reporting, like, okay, so CBDCs solve a reporting issue, meaning that the tax authorities have a much clearer picture of exactly what you've spent. So filing your taxes will be a lot easier, right? But that means they can see everything you've done. So you have no financial privacy anymore.
No, so absolutely. So in this programmable money, what they'll probably build into it, and it's actually in pilots, and it's actually in the digital Chinese yuan right now, is that you can track every single point and every single event where that money landed and from whom. So it went from person A, it went to person B. You can track who that person was, who the receiver was, at what times. It's pretty standard what we have now. But at any point, those people and the central bank or the CCP in China can stop that flow. They can just lock those funds like that. Meaning,
so if the funds touch an undesirables account, they can just lock it.
Lock it. And that's real right now. It's real. And also, before we carry on, I mean, pilots are going live in Ghana.
Yeah.
There's pilots in UK. There's a pilot in South Africa right now. This is very real stuff. People don't realize this until it's right upon you and it's just law. And you go, oh, okay.
Look, I'd just like to implore people in Australia, for example, who are like, the military will never stop me from leaving my house. I live in a first world democracy. Look at yourselves now, Australia. You are locked in your houses and not like locked in your houses like South Africa was locked in your houses in the beginning of hard lockdown, where you could actually go outside because no one is going to stop you. Just the Karen next door is going to moan. But she'd call the cops and they wouldn't arrive because of South Africa. In Australia, they have complete control. And this shit happens gradually then suddenly, right? Mm-hmm. And I don't know what people can have happen to them more than 2020/2021 to realize that like authoritarianism is not at the gates. It's fucking climbing over the gate like it's here. So anyway, that aside, so the reporting thing means that governments have complete control. They can see exactly what's happening. Repo automation, right? Like this is like individualized lending, right? At differential interest rates depending on who you are and what your credit score is. And this ties into the social credit score, right? So from an individualist or a non-conformist point of view who's not towing the party line, it means you can be excluded or charged a super high interest rate because of your social behavior.
Which is live right now. There's thousands of people cut out of the social and money system in China right now.
Do they have billboards in China with people whose social credit score is low and they put their faces on the billboard and they're like, this is a bad guy. His score is low. Don't be like this dude. Don't be like Lee.
Yeah.
Like
if that was happening in South Africa right now, you and I would be on there.
Oh my God. At least we'd be famous. Trade-offs. Okay, then the interoperability thing, right? So makes it easy because it's a quasi open network because anyone can jump on there and report. But it's not. It's a gate-kept, controlled, hyper-controlled network that everyone is forced to comply with. We have an alternative today, which is Bitcoin, which is a truly open network that anyone can participate in as long as you follow the rules of the network. Except the difference is there's no jackbooted thug who's going to come to your house if you don't comply and beat you over the head with a crowbar and take you to a gulag.
Yes.
Like you and I both work in the payment space. We've had the headaches of like trying to get a payment rail operator to try to like grant you access to the network. It's a nightmare. If you want to build anything on top of that, like a new innovation, you have to ask their permission. They can shut you out at any point in time. Permission networks suck, you know, like we have an open source, open network, which is Bitcoin, that anyone can build on and anyone can innovate on. And that will win in the long run because you cannot, like a centrally controlled thought process and set of ideals cannot compete against a truly open source, like innovative network that anyone, the world's innovation can participate in, because the creative genius of man is, you know, phenomenal. And no one can, you can't beat that through centralized command and control. Yeah. So open networks win in the long run. But
they do, and you wrote a very good article about that. And
thanks.
They always win. Open networks will always win. And we just got to keep thinking about first principles in this discussion. It's always about hard money. And you got to, what we talked about in the beginning of the show is that this is still fiat money. And this is why it won't work. Fiat money is fiat money and debt is debt. It doesn't work.
Sooner or later, the pipe has got to be paid.
Absolutely not.
That's the truism of fiat money. Like eventually it'll implode because someone has got to get paid at some point. And whether it's, you know, one government official who has more power in government that now is calling in his debts from other governments, or a more powerful government calling in his debts from a less powerful government, like pipe has got to be paid. So debt is, you know, when people say death and taxes are the two like certainties in life, maybe not. Taxes are not actually the certainty because the underlying principle of taxes is the debt. That's really what it's about.
Yeah.
Okay, next one that you brought up was increased credit provision and the velocity of money. Like, so I want to bring up like it's not like a philosophical point, it's actually reality, but consumption and the velocity of money is what has got us into the environmental disaster that we find ourselves faced with today, in my opinion. And the environmental disaster, in my opinion, is not climate change. We can argue about that, be it what it is. The environmental disaster we're facing today is plastic. Every single piece of plastic that has ever been made is still with us today, still exists. And we are churning out plastics at a faster rate than ever before. And all of that shit ends up in the sea. And for some reason, turtles like to eat it. I don't know why, but they get choked up on plastic. The problem is we have all this plastic ending up all over the place. And the microplastic, so as plastic degrades into smaller and smaller pieces, it finds its way into absolutely everything. So it finds its way into our food, it finds its way into our water, and we are just consuming microplastics. And we do not know the long-term effects of what that is going to have on human health. I mean, who knows? It might be the reason why cancer rates are as high as they are. The point being, overt consumption and cheap money that has no marginal cost to the person creating it is what's causing all of this in our society. If we had money, hard money, we would be able to price things accurately, and we'd be able to realize that producing plastics just for single use and throwing them away is actually really expensive. And the only reason why it's cheap is because it's all of the oil and gas industry that thus far has been subsidized by the fiat money printer and handouts, etc., is what causes plastics to be so cheap. And that is why we have plastics all over the place. So it's a knock-on effect of the relative cost of money to produce. So like stimulating consumption through a mechanism like a CBDC by changing interest rates and trying to get people to consume more is just going to degrade our environment even further. And you only need to look at like communist countries versus capitalist countries, whatever those terms mean to you. Like just look at where government has more control versus less control. And you can find in all of the communist countries, environmental destruction is higher. Soviet Union, environmental's fucked. China, environment's fucked. North Korea, Lord knows what the hell's going on there. Nothing good, I can tell you that much. But the environmental destruction that is wrought due to centralized government control is massive. And if you think that the production of plastics and through conspicuous consumption by forcing people to spend their money more often is going to change like that entire like production cycle, you're sadly mistaken. Like our environment is going to be fucked by CBDCs. So if you're a greenie and a hippie, you should be anti-CBDCs and pro-Bitcoin. Think what you want about the electricity consumption, but it changes the way that capital is allocated towards consumption of resources. And that ends up with a much more environmentally friendly society because we reuse things we produce, because you don't want to waste your hard-won sats on like single-use plastics.
Yeah.
So from an environmental perspective, I'm a hippie at heart, even though I hide it very well. But I think that like plastics are our biggest issue, and we should really be, watching out for that one.
No, I agree, man. I agree. I definitely agree. And like, I think sticking back to the principles of money, right? And why central bank digital currencies are a big problem is that once again, debt is debt. The fiat money system doesn't work. And we've talked about that many times. I don't want to go over that. But like a big thing is the inefficiencies of centralization. Centralization has efficiencies, but I believe the inefficiencies at a bigger scale far outweigh the efficiencies. Just look at the Soviet Union when they tried to control food prices of every good in the market and what happened to them. Now, the same thing is happening here. You've got one party building this entire system, distributing all these funds to millions of users, doing all the reporting, et cetera, et cetera. There's no free market there. There's no great fintechs, guys building competitive products to make that better. Do you think that's going to be completely efficient? What if all of a sudden you've distributed all this money and things are wrong? Just like Ethereum has been wrong so many times. Because these guys, I promise you, are not going to follow the mentality of Bitcoin to do things slow and steady and prudently. They're going to do the Silicon Valley, Ethereum, Cardano way of thinking. Let's do things fast. Let's innovate, but they'll fucking break things. And then what happens when all this money has been, and this whole system has changed, and actually there's a big mistake? What happens? You've got a ground up effect at that point. And there's obviously incredible inherent risk in that. Incredible risk.
Yeah.
That's a problem with monopoly on innovation.
That is exactly right, bro. The problem with monopoly on innovation is the cost of if you are wrong. There's no error correction mechanism. There's no way that you can course correct. It literally takes like the entire system collapsing under its own weight before you can course correct. And by that point in time, 50 million people have been ground under the boot of your oppressive regime, I've been listening to the Joe Rogan interview with Yunomi Park, that North Korean girl who escaped. And just listening to North Korea and like what it does to the human spirit. And like, she's talking about how when she was like 12, 13 years old, she had her appendix removed without anesthetic because it's North Korea, and there's no penicillin or anything, and they inject everyone with the same needle. Like there's no regard for human life, and there's just bodies stacked everywhere, dead bodies being eaten by rats. And because the people have grown up in this regime, there's no compassion. They see a dead body, they've seen a million dead bodies their life, they don't care. They see a dead child having its eyes eaten out by a rat, and all they can think about is let's catch the rat because that's going to be the best meal I've had in the last year. Like this is like the logical conclusion of these centralized command and control structures, like is North Korea. It's where it trends towards. And sure, not everything ends up as North Korea, but it only has to end up the Soviet Union or East Germany to be fucking horrific. Like no one wants that. Cuba, it's horrific. So the control that you give to a small minority of elite, of the banker nerd class, which is who will be running the CBDC show, is absolutely horrific. Like, I don't think we can imagine the horrors that this elicits. And I only hope that we have an alternative, which we do, which is Bitcoin, but that some nation states at least adopt it, and we can have some form of protection to go there and be like, can hide away here and not have this shit forced on me.
I don't think the nations have to adopt it. It's the people that have to adopt it, because once again, this is money for the people. And let's actually move to Bitcoin, because this shit's depressing me. But
yes,
Bitcoin's not for governments to adopt. It's for people to adopt, and they can always hide it by 12 or 24 words in their head and always have wealth around them. And that's the point. People worry about News 24 and Adrian Basson and all the things that are going on. But every single thing
I've never heard of
it. every single thing in this world that you live in, and your freedom is pointed to your wealth. If you don't have money, you're not free.
Yep.
You're not. I'm sorry. Like, you could be a hippie at some trans party. I'm sorry, but if you don't have money, you're not free. You have to have. It's the only way you can live. But if your money is not inherently free, then you don't have complete freedom.
Yeah.
And that's where Bitcoin comes in.
If they can turn your money off, if they can expire your money, if they can change the value of your money based on who you are and the way you interact, you're not free.
No.
Yeah.
And it all boils down to that. And that's why I love Bitcoin so much. It's first principles. It's first principles about freedom. This is why we're trying to like talk to everybody and educate people. And it's about buying Bitcoin, and it's about self-custody it. And I saw a thing the other today about people on a poll. How many people self-custody their Bitcoin? It's only about 50% of people. So it's the saddest thing I've ever seen. It's the saddest thing I've ever seen. They don't realize.
Only 50%.
Only 50%.
Yeah. We'll get that. Well, those are rookie numbers. We'll pump them up. But I mean, it was less than that prior. People are catching on. And I mean, pat ourselves on the back, because this is what we do. We want people to have self-custody of their Bitcoin. And that's why we do what we do. Because I suppose we, as South Africans, are in this lucky position, where we have an incompetent government and a malevolent government. Thank God they're incompetent, because you can see what they're trying to do. They're just terrible at execution, And that's why all South Africans should self-custody your Bitcoin. If you've got your Bitcoin on an exchange, you don't have Bitcoin. You have an IOU, which is not going to be worth shit when the government turns around overnight and says to exchanges, "Hey guys, no more Bitcoin withdrawals, freeze." And then you.
I think what's going to happen. My thesis with Bitcoin in the future, I think we really have to. We have to hope that the governments don't ban it, and I think they won't. Well, most won't, and especially America, because institutions and pension funds and ETFs are coming on board, and they're building a regulatory moat around it. But some countries will. But it's going to be exceptionally harder year by year to buy, first of all, KYC Bitcoin, free Bitcoin, meaning you've never KYC'd yourself in order to buy it, and more importantly, be able to self-custody your Bitcoin. There's going to just be all these different type of products, derivatives, whatever, that they provide you Bitcoin, because it's a hard money, but you don't ever custody it. And that's how they remove your freedom from it. If you don't custody it, you don't have freedom in it, and you don't have freedom in your wealth.
Absolutely.
That's what's going to happen. That's how they're going to build their moat around it, their control around it.
Absolutely. They're going to co-opt exchanges to do the dirty work for them. They're going to then confiscate Bitcoin some places, from the exchanges. Exchanges are not your friend, at the end of the day. If you're not holding your Bitcoin yourself, you're screwing yourself over. So, I mean, that's, I suppose, what we want to leave people with is like, look, get involved. CBDCs are coming. Nothing good is coming from them. They might sell them to some flashy banks in South Africa might sell to you, oh, this new form of digital currency is coming. You can get a differential interest rate based on like your credit profile that's better than someone else's. Bullshit. Don't fall for it. Like, get Bitcoin. You should have learned by now. The only person you can trust is yourself. And I suppose then from that, some like-minded thinkers. But we're in for a rough time. We've had good times that have created weak men. And that's where we are in the cycle, unfortunately, and it's up to a few of us who want to take on that mantle of, becoming a strong man. It's got to piss some work people off, but you got to do what you got to do,
Amen. But before we leave, I just want to play a video for everybody. And any last words from your side, Ricki?
No, that's it from me. Hey, I've had my rants, had a couple of whiskeys. Don't buy into the bullshit, guys. And surround yourself with like-minded people, man. Like, make human contact. Just, life's too short. Don't hang out with kooks. Just, surround yourself with people who think the same way as you and are on the same wavelength. And that's the only way you're going to stay sane in the times that are coming, in my opinion.
Yeah, amen. So I just want to leave people with a video now about, we saw what the world is like with CBDCs. I want to show you what a world could be like with Bitcoin. So have a great night. Have a great day. Cheers, everyone.
The year is 2040 and governments no longer have the power to print money. The world has transitioned to a global digital currency built by the people for the people. You walk by an old poster from the monetary crisis in 2025 that led to the demise of the dollar. Today, governments are merely utility providers offering basic services to attract citizens who have the power to freely move across borders. Barriers disappeared and the world thrives under competitive healthcare and education systems. Your watch chimes, a notification from your friend in Kenya who has just released her new song. You instantly stream sets to listen. She returned the favor by pre-buying you a beer at the local pub via the Lightning Network. You hail a ride from a decentralized self-driving network as it takes you to your remote cabin. The satellite allows you to work anywhere in the world. As long as you have 24 words in your head, you can carry your wealth with you at all times. Wealth that continues to grow in purchasing power, freeing you from the 9-to-5 grind prevalent in the early 21st century. You collaborate on multiple passion projects peer-to-peer funded by other individuals. The future has never looked brighter and freer than in the world of hyper-Bitcoinization.